Welcome to this Killick Explains Finance video. This week, Bitcoin Basics Part 2, why it won't replace currencies, no matter what its fans think to the contrary. Okay, so in a nutshell, Bitcoin has been called lots of things that sound a bit like a currency. So we've got a cryptocurrency, a digital currency, digital cash, a virtual currency, an electronic currency, and a future global currency. Those are all labels that apply to Bitcoins. You could be mistaken in thinking, quite realistically, this might be some sort of currency. In reality, I'm going to argue in its current form, it is not really a currency at all. It's just a digital asset. It is highly unlikely to replace a major currency such as the US dollar, the euro or sterling, probably ever. And that's because it doesn't fulfill some of the basic functions of money. And it's quite hard to see at the moment how it's going to do so, certainly anytime soon. So what is money? Most obvious question to ask next. Well, like money, Bitcoin is. So it is certain things which make it sound a bit like normal money, if you like. It is portable, transferable, desirable, divisible. You don't have to buy and sell one Bitcoin. You can go down to 100,000 Satoshi, as they're called. It's pretty hard to fake, not impossible it seems at the moment, and it is durable. All right, so lots of the things that you need something to be if it wants to be useful as money. But it is not fully secure. There is evidence that wallets can and sometimes are hacked. Exchanges, with the Mt. Gox problem, for example, it doesn't fully function as a medium of exchange, more importantly. So let's take a look at 2 or 3 big qualities, not on the left, that need to be on the list, if you like, for it to be money or a proper currency. Medium of exchange, close but no cigar. It's definitely not a store of value, and that limits its value as money. It can't function as a price inflator either. That's a slightly less important argument, but nonetheless an important one, and it's not regulated. Fans will go, hooray, it's not regulated, but actually that is a potential problem. So let's look at all of these. Number 1, a medium of exchange. Bitcoin gets quite close, but it doesn't get all the way. So what it does well, verification of transactions is done by miners rather than clearinghouses, and they're paid in freshly minted Bitcoins, for want of a better expression. And that process is fast, secure and cheap. So I'm not saying this all has to be done by clearinghouses and regulated bodies. It doesn't. All right, it can be done in other ways, and that's an exciting part of the blockchain technology. So that's good. Bitcoins can be swapped for goods and services, other cryptocurrencies like Ether, for example, and tokens in some circumstances. So these are things that give you rights over future development projects and so on. And it's anonymous. But is that enough? Bitcoins cannot be exchanged for any good or service to any retailer. So although the list of retailers that will accept Bitcoins is expanding, there are pubs where you can buy beer using Bitcoins, for example, it is by no means a universally accepted medium of exchange. Spreads on conversion back to hard currencies, what more, can be variable and can be wide. So it doesn't have some of the sort of liquidity and spread benefits of the main currency markets, let's say. And it's got a growing army of rivals. So you'd be wrong to say it's just all about Bitcoin, because we've got Ether, we've got a whole lot of other rival virtual currencies, 800, 900, and that's probably out of date the moment I said it. All right, so it's far from clear that Bitcoin will remain the dominant currency in the way that, say, the US dollar is the world's reserve trading currency. So close as a medium of exchange, but certainly not all the way there. Now, bigger problems when we say, is this thing a store of value? Because what it does well, technically it should be able to perform this function. There's no reason why it couldn't in theory. It's the practice that's the problem. Coins are stored in encrypted, individualized wallets, and they can be easily retrieved and used in purchases. So far, so good. And you can choose whether you hold the Bitcoin in your wallet, spend them, convert them back to another currency, and so on. But Bitcoin prices, as we've seen, are massively unstable and prone to huge daily price swings. And that is a problem, because holders will often prefer to speculate on rising Bitcoin prices, values, rather than actually spend them. Sellers have a problem. They've got to price goods typically in a reference currency because Bitcoin is accelerating in price so quickly, otherwise it's almost automatically deflationary. And as far as I know, nobody is yet fully paid in Bitcoin. That's because your wages are devalued almost the moment that you are paid them. All right, and it's those problems that basically stop it from being any sort of reliable store of value. Now, that's not all. It doesn't work as a price inflator. You might be saying, well, who cares? Should it? Let's take a look at traditional currencies. Now, central banks are not perfect, but they serve a useful function, because what they do is they can intervene to create positive inflation. And that is a good thing. They do it with interest rate policy, with quantitative easing and tightening, so printing money and withdrawing money from the system, if you like. And a lot of people cry foul, say it's manipulation, all right, they shouldn't be allowed to do it. But what they're trying to do actually is to make sure that inflation stays low and positive, 2% per year for argument's sake, because that stimulates spending and limits saving. You don't want people hoarding global currency. It needs to be moving, all right? And that helps with economic growth. So there is some method behind what Bitcoin fans say is the central bank madness, if you like. Now, with Bitcoin, basically you've got huge Bitcoin price inflation creating massive deflation for goods and services, and that is a bit of a problem, all right? On top of that, the supply of Bitcoin is finite, 21 million of them, as far as we know, can be created ever, and that in itself is deflationary if demand can't be satisfied. So you've got a kind of double whammy potential effect going on here, particularly as more and more Bitcoin are released and demand carries on growing. All right, and the market, as far as I know, lacks any trusted mechanism that can deal with that demand with additional liquidity. So as a price inflator, we have a problem. Now, regulation. Fans will say it's brilliant, it's not regulated, but there is a reason why regulators exist, believe it or not. So traditional currencies, financial institutions such as banks and investment managers are subject to controls. The currencies themselves are not directly regulated, by the way, but the people who use them typically are, and those controls are designed to prevent fraud and money laundering, all right? And the objective is actually to protect investors, not just to be annoying, as some people try and paint it, or to sort of interfere. Bitcoin, there is no central regulation, all right? It's therefore a target, a known target for fraudsters and money launderers, all right? Regulatory uncertainty on top of that adds risk, because this market will get more heavily regulated at some point. It's almost inevitable. I mean, China's taken the view of just almost regulating ICOs out of existence. All right, what the SEC and the FCA agree to do here remains to be seen, but they're going to do something, I'd have thought. That creates additional risk. Everyone is basically ignoring that whilst prices rocket. In other words, this has become just a mechanism by which people basically are gambling on future price rises. So lack of regulation is a problem, whichever way you cut it. So what is this thing? All right, I'm saying it's not a currency like a traditional currency. It is a rapidly growing digital asset with an increasing number of applications. Good. It's a way of showcasing underlying blockchain technology, but it's not what blockchain is fundamentally solely all about. And that's important. There are other uses for that technology, and it's certainly an exciting story. However, it cannot be said to be a currency like the US dollar, sterling, or the euro. There are three problems. Medium of exchange, not quite there yet. Store of value, nowhere near there. Price inflator, no. Regulated, no. All right. Is it a replacement for any of the above? I would say certainly not yet, possibly never. All right. And it's not even the only application of blockchain, far from. That is great technology, but all of the press, if you like, coverage has focused on just one aspect, which is Bitcoin. And it's certainly not, as I cover in other videos, a safe long-term investment. Now, currencies don't have to be that, but it's just worth noting at the bottom there. Okay, any questions? editor@killick.com. And to see related videos on Bitcoin topics, killick.com/learn.